Over the last 6 years, I made money, lost money, and made it back again, all through crypto. I've seen bull runs, crashes, scams, moonshots, and yeah, a lot of hype. But along the way, I figured it out what actually works. In this video, I'm gonna condense 6 years of hard-earned lessons into just 30-40 minutes. No fluff, no crypto bro nonsense, just real, battle-tested strategies that you can actually use. So if you're tired of the noise and you just want to understand how people actually make money in crypto in 2025, you're in the right place. So I'm going to share with you some lessons that I've learned over the last 6 years. First lesson, imagine putting all your savings into promising crypto project only to see it crash to zero overnight. How would you feel? Could you handle that loss? Every time before you invest in any crypto asset, ask yourself, what's the worst that can happen? Can I afford losing this entire investment? Crypto is risky and projects can fail due to hacks, market crashes, or maybe just poor management. Assessing the worst case scenario helps you investing only what you can afford to lose, protecting your financial stability. You just have to keep in mind what happened, for example, with Terra Luna. Terra Luna was one of the best crypto projects that we had on the last bull market. It went from 0.20 cents, it was pretty cheap, to $100. Terra Luna made a lot of people rich. But the thing is that Terra Luna has the Terra Luna token, but they had a stablecoin, UST. And in mid-2022, in May exactly, this has been one of the biggest crashes of the whole history of crypto. Like $100 billion of money erased. It's been one of the worst cases, one of the worst scenarios we've ever seen on crypto, because UST used to be one of the best stablecoins in the market, and there were a lot of people that was saving their liquidity on the UST stablecoin, because we had Anchor protocol, which was one of the protocols of the Luna blockchain, that was paying you a more or less 20% APY if you deposited those UST. So we had that problem that there were a lot of people that bought UST to save their liquidity on Anchor protocol, and they were getting like 20% passive income on their liquidity. That was unbelievable. In fact, it was too good to be real, and you saw how this story ended. But now, if you take a look on how the Luna blockchain worked, all the system of burning and creating tokens they had, it was so obvious. But back then, no one could imagine the top 5 blockchain, Luna, that I think that surpassed even Solana in market cap, could be crashing like it did. So this is the first lesson, and I want you to keep it in mind, okay? Because this is, for me, the most important thing. Before making any investment, you have to be sure that you can lose 100% of that money, okay? If you don't, if you have to pay the rent, if you have to pay anything with that money, please don't put it on crypto, because crypto is like a roller coaster. I've said many different times, your money can get up and downs so quickly, okay? You can lose all your money in 24 hours or even 12, or even 1 hour. You can invest $1,000 on a meme coin. This meme coin can be a rug pull and you can get out of money. So be careful when you're investing something. Keep in mind, which is your portfolio size? How much money you have? Can you risk it all? And that was the biggest issue that everyone did with Terra Luna, because everyone thought, okay, Terra Luna UST, it's a stablecoin, it's not gonna fall. Crash. UST to 0.0 cents. It's 1 cent. If you had $1,000 in Luna, now you have $10 in UST. So be careful, okay? Be careful, because normally crypto projects are not like Bitcoin. Bitcoin don't have anyone behind. But if you're looking at, for example, XRP, if you're looking at Sui, Aptos, even Hyperliquid, all of them, all those crypto projects have a team behind them. And this team can fail, or even they can be scammers and they wanna withdraw all your liquidity for them. So the key points here is that you have to evaluate the potential for total loss before investing, because you can lose everything. Then obviously you should just invest money you can afford to lose without impacting your life. If you have to pay the rent of your house with this money, please keep it on your pocket, okay? Then obviously research project risk. That could have been one of the best advices for people who bought Terra Luna, such as the team credibility and market conditions. Then be smart, use position sizing to limit exposure to any single asset. So at the end, you have to be prepared for a possibility of a total loss. This mindset will keep you grounded in the volatility of this crypto market. So be smart, please. Lesson 2. Bet on the winner horse. In the first lesson I told you that it's a good point to diversify, but not that much. Let me explain. In crypto, like horse racing, betting on every competitor doesn't make sense. You need to pick the winners. Obviously, it's not that easy. Over diversification is a common mistake in crypto investing, and you might have seen a lot of altcoin investors on Twitter, YouTube, and different social medias. Spreading money across too many projects dilutes your returns so hard, and also will make tracking your performance more difficult. Instead, you should focus on a few well-researched investments where you're truly believing on their potential. For example, in 2024, while many investors were farming hundreds of airdrops, they were farming everything they saw on Twitter, there were a couple of guys that just focused on some promising projects, like in this case was, for example, Hyperliquid. You have to know that those guys who concentrated on Hyperliquid, instead of doing 100 million airdrops on the hype airdrop, they saw significant gains. And you have to know that Hyperliquid has been the most rewarding airdrop on the crypto history. I think that like $7 billion were distributed, and I personally know some guys that literally became millionaires just because they were focused on one single airdrop. And obviously, it's a good point to diversify your capital. I mean, it's not a bad idea to put your eggs in different places. But be careful, because when someone tries to do many things, maybe you're not doing them right. I prefer to do, for example, 3 things on my 100% potential than doing 6 or 7 things but in my 50% potential, because at the end you have to know that everything you're doing, you have 2 competitors, and maybe those competitors are giving the 100% potential. So you have to be focused and know that there's a lot of people competing for the same reward. So it's not a good idea to concentrate everything on one single project or one single investment, but it's not a good idea neither to do over diversification. I know people that has portfolios of $10,000 and they are investing in 6 or 7 coins. Man, with $10,000 you should be betting on 2 coins maximum, and that's even too much, because you should put this $10,000 on one thing and truly believe in something. So the key points of this lesson is that over diversification reduces potential returns and increases so much the complexity of your portfolio. Lesson 3, patience pays. Wait for high conviction signals. That's it. In crypto, timing is everything. But how you do know when to act? The answer is patience and waiting for high conviction signals. That's it. There's a lot of people that waste a lot of money because they are not patient. This is like surfing. If you're surfing and you're trying to paddle each wave, you're not gonna get anything. You're gonna get tired, and the other guy is gonna take the best wave because he's actually just seated and waiting patiently. That's the same in crypto. And I think that frequent trading often results in losses from fees, poor market timing, and instead wait for strong signals based on technical analysis, fundamental developments, or market trends that inspire confidence in your trades. And that's important. Each trade you're actually doing has to be with conviction. Each trade has to be with conviction. If not, don't do it. I personally only adjust my portfolio about 30 days per year because I'm patient and I wait for these decisive moments. Obviously, if I'm doing scalping, I can do more trades. But when it's time to make long-term investments, I just do some adjustments on my portfolio when it's time to do them. And maybe 30 days a year, it's too much. I think that maybe the half could be better, 15 days a year. Just make some small change on your portfolio. You just have to take a look at the Ethereum chart and you will see why patience pays. Okay, just take a look. All this time we've got this lateralization on Ethereum between August till November of 2024. We had, as you can see here, like for example, let's see, it's like 92 days where the price of Ethereum was literally doing nothing. And here, you know what happened here? Donald Trump elections on November 2024. So here, your money would have been better on any other asset than Ethereum. So here, this is one of the reasons why you can see that patience pays. Just take a look. Maybe someone here, when Ethereum crashed on July 2024, maybe someone was scared here, they didn't buy, and then the price went up, as you can see, at 30%. They became in FOMO and they said, okay, the price is going up again, let's buy here. And just take a look. This candle here means that a lot of people was buying. But just take a look at what happened next. Another 23% down. So people who didn't bought here, instead of buying here, they had another opportunity on literally the same price. It was like 1% down. Maybe the difference for those guys are not too much, you know? And those who didn't bought here, maybe bought here, and then we saw another 7% down. And the same here, and the same here, and the same here. And this is the worst scenario. Just take a look at here. Maybe there was a lot of people that was afraid of Trump not winning elections, and they were just patient and trying to wait. Just take a look of what happened. Ethereum went up 44%, and maybe there were a lot of people buying here, and then 10% down. That's why crypto market is that difficult, because they are actually playing with your emotions every single time, because this is how people make money. You have to keep in mind that crypto investments, they are a zero-sum game. For you to win, there's someone that has to lose. And that's it. So you have to keep in mind that every time you're winning, someone is losing, because in this case, someone was buying you this Ethereum, you know? And here, someone was selling you this Ethereum. There was a lot of people that maybe sold their Ethereums here, and they saw the asset went a 71% up. And the same here, and the same here, the same here, and look at now, you know? So be careful, be patient, okay? Don't act with FOMO or fear, because this is the worst thing you can do in crypto, acting with your emotions. I think that in crypto, you should be like a robot. No feelings, no anything. Just be strict with your plan and do things how they have to be done. And that's everything, okay? That's everything. Because otherwise, you're gonna lose a lot of money, okay? You're gonna lose a lot of money. And the same happens here. If the price is going down 65%, maybe it's a good time for buying. Not now that the price went up 75%. Now it's not the time. The good moment for buying and for selling is for the people who's patient. And that's how the crypto market works. So lesson 4, train your take profit muscle. Okay, that's really good. Buying is easy, okay? But selling at the right moment is where the most investors struggle, myself included, many times. Learning to take profits, it's crucial for your success. I mean, I think that this is the most important thing you should learn today. Train your take profit muscle. At the end, taking profits is a skill that requires a lot of practice and time in the market, because many investors hold on too long, hoping for bigger gains. At the end, they are just being greedy. This is only to watch their profits evaporate when prices are crashing, because as I said, crypto is like a roller coaster. You can have your profits here, but then in the next day, everything's gone. Setting clear profit targets, whether based on specific price levels or percentage gains, will help you secure your profits and keeping risk in check. Just take a look what I did with Sui, one of my biggest bets on this cycle on crypto. Sui was by far one of my favorite coins, but I was on Japan on January and I decided on 6th of January, you can check here, that it was time just to sell it. And you can see day of the all-time high. You saw it on the Discord message. And why I decided to sell Sui on the top, okay? it was not because I have a guessing ball or something like that. It was just because I bought SUI here, okay? I bought it on 60 cents, on 70 cents, and I decided that, for example, for this kind of coin, a 10x was a really good return and was good enough for me to take profit and go to another kind of investment. So that's the reason, the main reason why when I saw that SUI was on $5.20, I said, okay, maybe it's time to retire my money. And as you can see here, Bitcoin, it's the most important asset on the crypto market. And just look at this. I mean, you can go up so hard, but you're gonna get low. Because I said to you, this is a zero-sum game, okay? And it's gonna happen here. It's not gonna be mooning all the time, okay? That's not gonna happen. It's not happening on the SPX. It's not happening on Ethereum, on BNB, or any single other asset. I mean, everything you invest, you have to keep in mind that it's gonna go down. And I will never regret of selling SUI the 6th of January of 2025, because that was one of my best options and movements I ever done. It was a 10x performance, I sold, and I forgot about SUI. Now it went down, I bought a little bit, now it's up again, and that's it. That's how crypto game works. That's how people actually make money here. If you actually want to make money here, you have to be patient, but you have to know when to buy. But the most important thing is knowing how to sell. Because there's a lot of people doing really good buys, but there's just a few amount of people that knows how to sell. And this is the amount of people that ends up making money. Lesson 5, don't get stuck in old winners. And this is for you that come from the 2020. This is your second cycle and you're actually betting on Cardano, Polkadot, and other things. Just because a coin made you money in the past doesn't mean it will do it again. Learn to let go and find the next big thing. And we are usually doing these investments based on our feelings. Because, for example, in the next bull market, I will feel like, oh, SUI, that was a really good project. It's gonna boom again, I'm sure. But this is not, it has no reason to do that. I'm just investing here because I have feelings for this project, because I made a lot of money with SUI, so now it's gonna do it again. It doesn't work like this. You have to keep in mind that this is not SPX. We are a technological market, and the crypto landscape is evolving rapidly. And yesterday winners don't always succeed in the future market cycles. And you can just review any single chart of the top performers of 2018, 2021, they are not always the same. You just can see 3 assets: Ethereum, XRP, and Bitcoin. The others are changing every single cycle. So you have to review your investments regularly and ready to move on if a project lacks long-term potential. And while projects like Bitcoin or Ethereum have proven themselves across multiple cycles, even those should be only be held if their core fundamentals stay strong. And you have many different examples of what I said. Polkadot, Cardano, Shiba Inu, all of them never recovered their all-time highs. Just take a look at Polkadot. Polkadot is the worst of those. I was literally a fan of Polkadot, and just take a look at this. Polkadot used to be, look at my technical analysis on 2021. I mean, just take a look. Polkadot used to be on $54. It's actually on, look at this. It's actually 91% down. Imagine holding everything you had here. I mean, this is a total disaster, man. This is a total disaster. So be careful with that. Be careful, because those players maybe are not gonna succeed again. Just take a look at Cardano. It's never recovered their all-time high. It's not even close. Just take a look. Cardano used to be on $3. It's actually in less than $1. It's 74% down. I mean, that's crazy. Be careful. And I think that maybe if you're starting out, the best thing you should do is to invest in new things. Because maybe all things are never gonna get their all-time highs. And the thing is that, okay, it's been a good idea to invest in Cardano on bear market, because this asset made you a 400% return. But the thing is that no one sold here. You know why? Because everyone that bought here was expecting the price to go here. So who sold here? No one. No one, because everyone was expecting Cardano here. And same with Polkadot, same with Shiba Inu, same with every other project. So be careful with that, because I think that this is also one of the biggest mistakes that everyone is actually doing on crypto. And I made it. There's a lot of people that made it, but please be careful, okay? I'm happy because at least this cycle I haven't did this issue, but I was close to, okay? I was close to, because I was loving so much different other projects. I was the one that in the last cycle was thinking, okay, I want Polkadot to go to $4. I will be accumulating as much Polkadot as possible. It's gonna reach $50 and I'm gonna get rich. Look at this. This is Cardano. Look at this. Man, I would be poor now. So the key points for this specific lesson is that market is changing, okay? This is a rapidly evolving market, and all winners may lose relevance. Or not may, they will lose relevance. Not always, but 99% of them. And then if you want to invest in something, evaluate the project fundamentals, not the past performance. This is not saying you anything, okay? You cannot compare Ethereum or any other crypto project with Bitcoin, for example, because at the end, Cardano, Polkadot, and all those projects are just startups, okay? And startups can fail. Bitcoin is not a startup, but Cardano is a startup. Solana is a startup. XRP, well, XRP is maybe not a startup, but Sei is a startup. Everything is a startup instead of Bitcoin, and maybe Ethereum. There are some exceptions like Solana, which has been the only asset that is being worth it to hold for this cycle. You cannot predict that. I mean, no one thought that Solana would be here after this bear market, because Solana has been the only one that survived. And just take a look at this. I mean, for 20 projects, just one survived. So if you're an exceptional fundamental analyst, that's okay. And if you think that an asset is gonna hold, that's okay, but be careful. Sixth lesson, and this is gonna be a good one. Embrace volatility. If you can handle a 70% drop, crypto might not be for you. But with great risk comes great reward. Crypto's volatility is what allows for you to get significant returns. But it also means enduring large price swings. As you have seen, this is a fucking roller coaster. Top altcoins can drop 70% or more in mid-cycle, yet recover strongly and get to the all-time high. So you should stay calm and focus on high conviction moves, and as I said, rather than reacting to every fluctuation. As I said in many of today's lessons, you shouldn't be acting on your emotions and you shouldn't be reacting on every fluctuation. Just be careful, don't worry, invest on high conviction bets, and don't worry about it. Just be patient and let the market make it. Just take a look at Bitcoin. Bitcoin has seen multiple 80% corrections but always reach new highs. So the key points for this lesson is the volatility is normal and drives you to high returns. And historical recoveries like Bitcoin's show volatility's upside. So embrace volatility as the cost of crypto's potential and act only when you are highly confident. Lesson 7, I like this one. The real data is on-chain, not on X. Don't believe everything you're reading on X. The real insights come from on-chain data. X is full of hype and misinformation, and often from people promoting their own investments. On-chain data, like transaction volumes and active addresses, provides transparent insights into projects' health and adoption, making it far more reliable basis for decisions, especially if you're investing your money. So on-chain metrics show what's happening behind the chart, who's accumulating, where the tokens are going, how long they've been sitting. That's behavior, not price action. You should definitely rely on on-chain data for informed decisions and be skeptical of X-driven hype, okay? Be careful. And finally, the last lesson, build or join a network. Lone wolves rarely win. You have to keep in mind that crypto is a team sport. The most successful investors collaborate and share knowledge with others. A strong network provides you insights, support, and opportunities that solo investors normally miss. Every successful crypto investor I know is part of a community or a mastermind group where people share strategies and they stay ahead of trends. For example, 1 month ago I was on the token 2049. This was an event that was on Dubai, and I went with Bluffin, one of the sponsors of this video. In this event I had the opportunity of meeting a lot of people, like for example the co-founder of Polygon, one of the biggest crypto projects in the world. When you meet this kind of people, you're able to get a lot of data that the people that is actually all the time reading X is not earning. I mean, this data it's just given on small places with a small amount of good people. Okay, so you should try to build or join a trusted network to boost your crypto investing if you want to success here. Okay, because as I said, this is a zero-sum game. I've said it many different times in this video, but if you team up with people that is good enough, you're gonna be on the side of the winners, because here on crypto there are two sides, those who win and those who lose. So well, I hope you found this video helpful, and if you want to go deeper, I put together a free crypto guide that breaks down everything you need to know to actually get started, from setting up your wallets to avoiding common scams to spotting real opportunities before the crowd. It's short, practical, and made for beginners who want to get serious in 2025. So you can grab it for free, links in the description, and don't miss it. It's the guide I wish I had when I started. So thank you so much for watching this video. Leave me your comment, and thank you so much for watching me. This is Jose, and see you in the next video.